Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hello everyone, welcome to another episode of the Smart Property Investment Show. Unfortunately, I am not Phil Tarrant, as you may have picked up by my voice. I'm Grace Ormsby, one of the journalists at Smart Property Investment. I'm sure you're all aware by now that we love bringing property investors into the studio to glean some insight on how they've got to where they are. You know, this is something that we've been doing for a while now, and we're changing things up a little bit in 2020, and I'm really excited because this is something that we're going to be doing more of into the future, but talking about the commercial side of things, because we do often stick to what we know and stick in the residential area. So today I'm joined in the studio by Peter Johnston. Thank you so much, Peter, for coming in.
You're welcome, Grace. Thanks for having me.
How are you today?
I'm feeling great. Feeling good. Yeah.
It's been a busy day for you, I think, but by the sounds of it and talking to you a little bit before, every day is a busy day for you.
Yeah, it is.
Can you give us a little bit of a background of, what you do day to day before we go into anything else?
Well, funnily enough, property is actually not my mainstay day to day. I work with a lot of small businesses on a day-to-day basis. But the beauty of property, as I found out early on, is it doesn't take a lot of time if it's well set up and well managed. And so, from the property point of view, maybe up to 4 or 5 hours a week is really what I need to spend on the property business to see it moving along nicely. And I've got a good team. I've got a building manager and I've got a finance manager. Both those people keep the business moving along nicely. So from my point of view, that part of it's quite easy.
Obviously, you do a lot of work in the commercial property side of things, but that's not where you started, is it?
No. Well, we started in business really to start with, and then sort of felt the need to take care of the future, started investing in residential property. Our first residential property was bought in Western Sydney in 1997 for a great sum of $57,000, if you can imagine.
Wow.
So that was our very first investment, and it cash flowed back then probably around $20 a week or $20 a month. I can't remember what it was. It was something crazy, but it cash flowed, and that was the important part for us. Our reason for buying was to have positive cash flow properties. And so we did that for about 3 or 4 years and then soon moved into the commercial market. We had a business at the time and our need was to get a commercial office. And so we sort of fell into commercial just by a need more than anything. And we bought a building that was much bigger than we needed and ended up having some tenants. And so I got a sense of what that felt like. And so from then on, our focus was commercial and we moved away from residential.
So you're talking about we here. You're obviously in with a business partner.
My wife.
Your wife, yeah. So do you still have that first residential property?
No. No. We used that residential property and a number of others that we purchased around the same time. We used the equity from those properties over time to help us move into commercial. Mm-hmm. And our strategy was always cash flow. It was never capital growth. It was always intended to be cash flow. That was the number one strategy we had. And so it started off in residential as cash flow, even though it was measly, it was only small, but it still was positive and that was important. And then we moved into, commercial, which can generate far bigger cash flow results. And so the return on investment for us was really about the cash flow, not the capital growth.
It started from a business kind of point of view. Would you say then that your commercial portfolio has grown with a business? Has it sort of coincided along all points of that journey, or do you see it as a separate thing?
Both. The answer is yes and yes. As our business grew, and our philosophy was quite simple. We thought, we could grow a business and sell it and benefit from that sort of capital growth over time and the cash flow from the business along the way, or we could take the profits from the business and invest it into cash-producing assets. And that was our primary strategy. And so as the business got more successful, it gave us more leverage and more ability to buy more real estate. But as the real estate started to grow, values went up, rents went up, then those particular properties, and in commercial, everything is based on the lease and based on the cash flow in terms of value. Those properties gave us more leverage into more properties. And so it was a snowballing type effect, because we viewed it as a business, and the commercial side of it is a business, and that's how we view it. Even when we bought the residential properties, we bought them, in company in trusts. We didn't buy them in our own names. And so we treated it like a business. That was how we saw it in the future. Even though it was just our one little $57,000 house, we still thought that, okay, this is going to be a business in the future. We want to grow it.
So is Western Sydney still an area that you're honing in on and you've got some more investments there, or is it elsewhere?
No, most of our portfolio is, we've got some property in Victoria, Wollongong, Sydney, Newcastle, and central New South Wales. So most of it's, yeah.
So with, commercial property, a lot of people do just see it as that office space, and that's obviously how you started it out as. Is that what all of your commercial properties now look like, or...
No.
Talk us through that.
Yeah, so the first property we bought was in the suburb of Rosebery in Sydney, and we no longer own that. It's now in development, or it's been developed into apartments. But it was an office and a warehouse. So we sort of got a sense of what that felt like, the warehouse/office combination. And so we ended up buying a few properties like that. And then we went to strictly office, and then we actually went to some light industrial. So, the sort of mix has not been too varied. We've kept it fairly narrow. Mm-hmm. And I think that was by design, because we got to understand that market sector and we didn't have to sort of deviate. Although we have dabbled on one occasion in childcare, and I'll probably run the other direction if that comes my way again, because it was too much. But yeah, so for us, it was primarily office with something with a light industrial, but nothing too heavy. We're not looking at manufacturing, more like storage and that sort of thing.
Why have you stayed in that area? What do you see? Is it all still that cash flow perspective?
I'm a businessman first, and so I believe in niche, and I believe in following a system and not chasing shiny new objects. And so for me, it's very easy to sort of get a lot of learning around one particular asset class. And I talk about an asset class within an asset class, if you like. So once you learn that, it's like Victoria, for example, versus New South Wales have very different leasing laws. And so I don't like the leasing laws in Victoria, but I like them in New South Wales. And so I'd prefer to stay in New South Wales for that reason. So it's just about picking a strategy and sticking to it. Nothing more, really, nothing less than that.
Are you picking new properties based on your need to get more income, or is it based on opportunities, or is it because you've seen a great deal? Like, how does that come about? Especially commercial, we see property advertised everywhere for residential purposes or, investments. All that kind of information is so readily available. Some would say too readily available. How do you find the commercial stuff?
Well, I would say that commercial is more readily available because I'm on the lists and I get phone calls, texts, and emails daily with new commercial property deals. And that's probably because the way it works is agents put you on their list and they'll market to you. You don't see it advertised as much in the same way, but if you went to realcommercial.com or commercialrealestate.com, you'd find the properties there. In the end, though, the properties we choose and what we want to invest in comes back to our strategy. Initially, when we started, it was a cash flow strategy, and there was sort of a formula around that for us. And then as I've got older and our needs have changed, we are looking more probably at capital growth. So we take a lower yield on a property for the exchange of a higher capital growth. So we'd move money out of a regional area, maybe like Newcastle, and bring it back into Sydney because Sydney's got potential of higher growth, whereas Newcastle might have a greater potential of capital cash flow. So it's just strategy. I think that depends on what you need, where you are in life. And for that, that's really where it is for us.
I might pick back up on that capital growth part just after a quick break.
Worried about making the wrong choice with your next investment? You're not alone. If you truly want to become the master of your own lifestyle design through real estate, then you need to speak with Buyers Agents, who'll help you acquire cash flow positive properties in high growth areas with value add potential, so you can create more freedom in your life. Visit dash.com.au/SPI.
So Peter, just before the break, you were talking about that capital growth piece and the change from cash flow, and then how, everyone's strategy is a little bit different. And you're talking also about being on all the lists for all the commercial property. Is, the capital growth that you're seeing sort of, I don't know if you'd even know if you're not really in the residential market anymore. Is it different between commercial and residential?
It definitely is. And look, even though I may not be investing in residential, I own a home, so I'm always interested in what the market's doing. And because I just love real estate, I can't help but look at it. But they do generally follow different trajectories. And over the years, I've seen, the capital growth in residential far outstrip the capital growth in commercial. And it's over the last 5-7 years, that's probably changed. Whereas commercial, particularly the areas that I've been looking, have sort of come back into line and certainly have performed well. And a lot of that has to do with low interest rates, I'm sure. Also has to do with development. A lot of the areas that we were really keen on and have been keen on over the years, sort of the inner west, city fringe, airport, south of sort of the city toward the airport, Botany, down that way. You just have to look at the number of cranes that have been in the air to know that sites have been sold for development. And so capital growth will always be driven up by the demand from developers, and you've seen a lot of that. And so one of the key aspects of commercial that I've always thought about is change of use. And so when you buy a commercial property, you need to think long term. What's it likely to be in 10 or 20 years? Because, you certainly can gain cash flow from it, but if you want to sell it, you want to know what's happening in the area. Is there infrastructure going in? Is it likely to be rezoning? I had a property that, had a 3-level zoning on it. So 3 floors was the limit, and then it went to 21 floors. And so you can imagine that in itself improved the capital growth potential. So always sort of considering future uses is another thing, and understanding what the area is going to be doing.
For sure. Does that link itself up with, the population growth and who is moving in those areas? It seems like, they're the growth corridors of Sydney that you're talking about.
Yes.
When you're looking at residential, when you're looking at the airports going in, when you're looking at all of that. Is that heavily weighing on your decisions as well? What is going on in that residential area?
Yeah, you bet. In fact, I took myself back a few years ago to do a master's at UTS on property development and urban planning, or in town planning, and not really for any other reason than I just wanted to learn a little bit more about the city and what was happening in the city. And so as you learn about councils, and you learn about planning, and you learn about zoning, and you learn about infrastructure, you learn about train lines, you learn about development intentions around train lines, that affects obviously residential, but that if you hold commercial property in those areas and you want to divest of that commercial property, then that it's likely going to go to developers. So yeah, there's all sorts of things. I mean, it's fascinating. I love it. There's more to it than just sort of like the land and the building. You can see so many different things that influence the performance of property over time.
Oh, for sure. Is there, you've obviously got that education too behind you. Do you think you need that when you are going into that commercial side of things? Is that you have to be a little bit more invested in what's going on? You can't just buy a property and get tenants in and hope for the best?
Yeah, I just realised this isn't a visual medium. Here I am shaking my head. No, you don't need the education. I mean, I think property, you need to look at it like a business. That would be my main thought, is that you need to look at it like a business, but you don't need the education. It is, as one of my mentors used to say, it's always just the money and the numbers, money and the numbers, money and the numbers. You get the money and the numbers right, and a spreadsheet will help you do that, then you can't really go wrong. So yeah, there's lots of intricacies to property, of course, but it's not a rocket science type venture. It really is quite simple.
And how often would you say that you're looking back into that market?
The commercial market?
Yes, when you're thinking about making new purchases or whatever. Is it a 6-monthly thing? Is it every month thing?
Every day.
Every day, yeah.
I mean, I could show you, I probably had 20 or 30 emails today on opportunities.
Yeah.
And I never stopped looking. And I would probably, discard most of them, but every now and then I'll look at one and I'll go, and even if I'm not buying, I'll go look at property. Just because I'm not buying doesn't mean I shouldn't be looking. By looking, I'm keeping my relationships going with my agents. I'm seeing, potential. I'm starting to see what properties are selling for, whether the market, because if you only talk to an agent when you need to buy, the only piece of research you're going to have is what the agent's telling you. So the research I want is first-hand research, and the best way to do that is to get out and have a look.
I really like what you said about that relationship with the agent. So we might just have a quick break and we'll come back after that and we'll talk about it then.
Are you looking to capitalise on the projected growth opportunities in Brisbane? Speaking to the local area specialists will ensure you receive the best possible Christmas gift now and in years to come. Streamline Property Buyers have the most comprehensive due diligence process. Clients are constantly surprised and delighted by their thorough approach, including a 45-plus point checklist. Find out more at streamlineproperty.com.au, the most qualified buyers agents in Brisbane.
Peter, just before you brought up the topic about, having a really important relationship with your agents, how does that, impact on what you do end up buying, or, even does it affect when you sell, or if you're looking at tenants and things like that? Can you just give us some insight onto that?
I think in business, and again, I look at this as business is all about relationships. And I've got agents that have worked with me for 10 plus years on various things. Either they've been leasing agents, or they've been selling agents, or they've been agents that I bought through. I've got one agent at the moment that's working on a property that's vacant, and he's been basically, I think he may have even sold me the property. I can't remember, but So for me, loyalty and relationships are really important because there's trust. And once there's a level of trust built, then, if he's going to think or she's going to think of something or someone as a purchaser, I hope to be the first person if there's an opportunity that pops across his or her desk. Because a lot of deals have been done off market. They never get to market. Saves the seller a lot of marketing costs, saves the agent a lot of grief. And if he or she knows that I'm looking for something, then the deal will get presented to me. And that's not going to be presented to me unless I have a relationship. So it's critical.
Is that coming into that 5 hours that you were talking about earlier in this podcast about the time that you are really spending actively on your property portfolio?
Yeah, look, I would average that, of course. There would be times of the year or in a period of time where I would spend a lot more time. If a lease is coming up for renewal and I'm negotiating, or if I'm looking for a new tenant, I'm negotiating a new lease, I may spend days in a week on that particular project. But generally speaking, if I average it out, there's always about, maybe 2 hours of that time spent looking at deals, analyzing deals, considering them, maybe going out and having a look at a property. But generally speaking, it's the management side of it is usually, provided there's not leases coming up, and that's one of the nice things about commercial property is you have long leases. So long as the leases aren't coming up, if the management side of it's pretty straightforward, it's not complex.
And you talked about having a team around you. Can you just give us a little bit of information on how having a team helps, what they do, and is it the same kind of thing? Like, is it something that every property investor who is very serious about building their property portfolio, should be doing? Or is it that personal thing for you because it's also from that business side of things?
I think you can do it a number of ways. Certainly, if you're just buying residential property, you may have a managing agent, and the managing agent takes care of payments, maintenance, etc. There's obviously a commission you pay that managing agent. So I've always factored that commission and thought, well, for the volume of revenue that's going through our business, if I'm paying managing agents, maybe I could do it myself less expensively and maybe with more success. I've got a building manager who's been with me, 20 plus years, and his job is to ensure that the buildings are serviced and that they operate. They're like, just pieces of equipment that they're operating, and that the tenants are happy from that point of view. He doesn't deal with them at a leasing negotiating point of view, but he deals with them from a day-to-day point of view. And then I've got a bookkeeper who takes care of all the finance things, chases rent, or not that usually is an issue, and handles outgoings and things like that. And then I have obviously a lawyer and I have an accountant who are both external, but both who are critical to my team. And so for me, my main job is to handle negotiations, take care of the high-level part of it, handle finance, handle relationships with agents. And so as a team, I think it's critical. It's just like any business. Now, did we have that when we bought that first $57,000 house? Well, no, but we had a business. And so the $57,000 house still had a little bit of bookkeeping associated with it and a little bit of maintenance associated with it. And so we used members of our team and our business to take care of that, which was to our advantage then. But as the portfolio has grown, we've had full-time people on the job.
I'm sure that would help a lot.
It does.
Negating some of those. I was just about to ask you too, you've been in this business for 23 years now. Are there any horror stories or any times where you look back and go, what were we thinking when we bought this property or trying to find tenants?
Yeah. Yes. And so early on, our number one goal was cash flow. And so we probably bought some property a little bit too quickly based on the cash flow performance of the property, not thinking long-term about what that particular property would be doing in the market. And that was, the piece of advice I gave earlier was about the future use. So in one regional centre, we had a large call centre, which overnight just disappeared and the property was empty for a long time. We had to basically, refurbish the property and break it up into smaller suites. I mean, I'm talking a big property for a regional centre. So it was a very difficult situation, but it had cash flowed beautifully up until that point. So I kept justifying it. But and there was another one similarly, another regional centre where we had really good cash flow, and then a government agency left and it was empty for 2 years. And we turned that into a childcare centre. So that was, future use. It could move from offices into childcare. So thinking in those terms are really critical when you're buying.
Okay. So it's not like just, if this isn't working, we just discard it. It is a little bit of that. How can we work with what we've got?
Yes, definitely, because commercial property, the value of it in many places, not necessarily in Sydney, but certainly in regional centres, the value of a commercial property is tied directly to the lease and the yield. And so if you don't have a tenant, the property value drops. So sometimes you're like, I can't sell it. I'll be going backwards based on what I owe. And so you need to do something creatively to get turn the building around. And so that's critical.
And you talked about having those leases that are generally longer, which does help as well. Are there some lease lengths, though, that you look at and there's some alarm bells going for, the kind of tenant that you've got in there or that would be considering going in there? I'm just thinking, we've seen so much change over the last 23 years in technology, in the way that, business are operating. Is that something that you've sort of had to think about too?
Yeah, definitely. You didn't hear me talk about retail. I'm not a big retail fan. So it's just some people would be, but I'm not. I don't like retail. For other leases, however, I think you have to do due diligence. And with a commercial lease, you are entitled to see the financials of the business, to understand a little bit about the company before you actually agree to them leasing the building. Usually if someone's asking for a short-term lease, I want to understand really why they're asking for that. And mostly I would say no to it. But of course, there would be occasions where you would say yes, depending on the company. I think that the riskier part is the small business, the business that doesn't have a track record. And I've taken a bit of a gamble sometimes with those, and it's worked out in my favor. But I do it very cautiously. I prefer to have blue chip corporate quite tenants. But mind you, I had a really good tenant in the Newcastle region that went broke overnight. And so we're left with an empty building and warehouse full of stuff that need to be cleaned out. So, it just depends. You can't always pick it.
That sounds like it. Peter, thank you so much for coming into the studio today. I feel like we're going to have to bring you back into the studio at some point to talk about your bugbears and, everything else, because you know so much about this area of investing, obviously. But yeah, thank you so much for coming in.
Thanks, Grace. Appreciate it.
To everyone listening at home, thanks so much for tuning in to another episode of Smart Property Investment. If you have a question, don't be afraid to reach out. You can contact us through our email at editor@smartpropertyinvestment.com.au. Whatever platform you use to listen to us, make sure you go and like or you review us on there. Check us out on our socials as well, and you can contact us on Facebook, Twitter or LinkedIn. And don't forget, if you're listening on our website, that you can scroll down and there's a record now button down there. And you can actually ask us a question that we might play back on a later episode and we can have your questions answered that way. Thanks so much again for tuning in. I've been your host, Grace Ormsby.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
If you're a regular listener to the Smart Property Investment Show, then odds are you're already a property fanatic who loves hearing stories on investing from real people. The good, the bad and the ugly. Be with people just like you and join the group Passionate Property Investors on Facebook now. Become part of a community who know what to do and when to do it. And the time to do it is now. Passionate Property Investors. Tribe, tools and tips. Find us on Facebook today.